In a stunning new proposal, former President Donald Trump has announced plans for a $2,000 payout to every American. While the news has excited voters, analysts are asking a deeper question. Could this be the spark that reshapes the future of cryptocurrency in the United States? If millions of Americans suddenly receive fresh cash, where will that money go? Into savings, stocks, or could a significant portion flow directly into Bitcoin, Ethereum, and other digital assets? Trump's announcement has made waves across financial and political circles. Supporters see it as a lifeline for families struggling with rising costs, while critics warn it could be a risky populist move. But beyond the politics, this proposal may trigger economic side effects that many have not fully considered. Today, we'll explore what Trump's payout plan means, how it could affect the U.S. economy, and why crypto investors are paying close attention. Trump made the proposal during a campaign event, promising to put real money back in the hands of hardworking Americans. Under the plan, every citizen would receive a one-time $2,000 stimulus payment, funded through new debt issuance and redirected federal spending. The stated goal is to boost consumer confidence, revive small businesses, and help Americans cope with rising living expenses. If implemented, this would inject over $600 billion into the economy, a bold promise aimed at voters concerned about inflation and purchasing power. Economists are divided. Some say this stimulus could jumpstart short-term growth, increasing consumer spending and supporting markets. Others warn that flooding the economy with hundreds of billions of dollars could further fuel inflation, eroding the value of the dollar and potentially increasing interest rates. And when fiat currencies weaken, investors often turn to assets like gold and cryptocurrencies. That dynamic could have significant implications for the digital currency market and could even influence long-term investor behavior. This scenario is not unprecedented. In 2020, U.S. stimulus checks reached millions of Americans, and many used part of that money to invest in cryptocurrencies. That influx of new investors helped drive Bitcoin from under $10,000 to over $60,000 in just 1 year. Now, crypto enthusiasts are wondering if a new round of payouts could produce a similar effect, potentially bringing millions of new retail investors into the market almost overnight. Consider the numbers. If every American receives $2,000 and even 5% of that money flows into crypto, that represents tens of billions of dollars entering the market almost instantly. With adoption higher than ever and platforms more accessible, the potential impact could exceed what was seen in 2020. Bitcoin and Ethereum could gain significant momentum, while smaller altcoins might experience rapid speculative growth as new investors enter the market, creating a ripple effect across exchanges worldwide. However, the environment is now different. Cryptocurrency has become more mainstream. Do you think? Could a $2,000 stimulus really trigger another crypto bull run, or will it simply add more pressure on inflation? Let us know your thoughts in the comments below. Institutional investors hold billions in Bitcoin ETFs, major corporations are using blockchain technology, and regulatory clarity is improving. If this new stimulus materializes, the influx of cash would enter a more mature, liquid, and globally connected market, potentially magnifying both opportunity and risk. Yet the picture is not entirely bullish. To understand the full implications, we must examine the broader economic effects. A $600 billion payout would likely increase national debt and add more dollars into circulation. That could pressure the Federal Reserve to respond. If the Fed tightens policy to curb inflation, higher interest rates could weigh on stocks, tech, and even crypto prices. Conversely, if the Fed remains neutral or eases policy, a weaker dollar could encourage more investors to turn toward Bitcoin and other decentralized assets, seeking protection from inflation and currency risk. In essence, the market's reaction depends on how debt and inflation are managed. History shows that when trust in fiat currencies declines, people look for alternatives beyond government control. For the average American, a $2,000 check might mean catching up on bills, paying rent, or buying necessities. For the financially savvy or risk-tolerant, it could be an opportunity to reevaluate investment strategies. Should part of that payout go into crypto? Timing, regulations, and personal risk tolerance all matter. While an influx of cash could lift crypto prices, short-term, long-term trends will depend on whether the stimulus strengthens or destabilizes the broader economy, and whether consumer confidence remains high. There is also a psychological factor. Stimulus checks often boost optimism. When people feel financially secure, they are more likely to take risks. That optimism alone can drive markets higher, creating a self-fulfilling cycle. Social media and trading apps amplify this effect, meaning a single political announcement can spark buying waves across platforms like Coinbase, Binance, and Robinhood. Risks remain. A new round of payouts could trigger inflation, prompting policymakers to tighten regulations or control over crypto exchanges. That could slow the market temporarily. Additionally, sudden investor interest often attracts scams and speculative projects aiming to exploit inexperienced participants. Investors who do not research carefully could see losses within days of entering hype-driven markets. Yet opportunity exists where volatility is present. For long-term crypto believers, a stimulus-driven dip followed by recovery could offer strong entry points. Cautious investors may prefer to wait for market clarity before committing funds. Either way, this proposal demonstrates how politics and crypto are now closely linked, with decisions in Washington capable of influencing markets within minutes. Trump's $2,000 payout is not just about financial relief. It is a test of the modern financial system, a reflection of the delicate relationship between government spending, inflation, and decentralized money. Whether it triggers a short-term rally or adds long-term uncertainty, the connection between economic policy and cryptocurrency is undeniable. So, what do you think? Could a $2,000 stimulus really trigger another crypto bull run, or will it simply add more pressure on inflation? Let us know your thoughts in the comments below, and don't forget to like, subscribe, and hit the notification bell.